Okay, good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, July 10th. Michael Boutros here with you this morning. Hey, Jaya, good morning to you. As always, Dagon, great to see you as well. Kelly, Chris in the house, Mark, Mike, Peter, great to see you guys this morning. So we have some work to do. Interesting moves on the British pound. Obviously, is probably making the most headlines with everything that's going on with Brexit. Um, the decline does mark some sort of correction, as Jamie noted in his piece. I'm thinking the same lines. You get correction off this advance to the downside. Ultimately, it doesn't really change the picture yet. These huge fundamental sort of developments, especially when it comes to formations of government and the sensitivity to Brexit. Listen, I would just steer away from it for now. We'll take a look at the levels. I'll update you from what we talked about on Monday. But I do want to be cautious on the pound. So we'll take a look at that. Obviously, DXY, we'll start off with yesterday's update on Aussie dollar. We are getting the pullback, looking for support just lower. Aussie yen stretching into resistance, then pulling back, looks pretty good as well. Talk about euro dollar, sterling, as I said earlier, and dollar CAD did break to the upside in near-term formation that we've been following on this decline. So you probably get a little bit more juice there before it turns over. We'll take a roundabout look at dollar yen. Haven't been trading it, but we have made it through near-term resistance. And a quick update on gold and crude. Any other questions or trade setups? As always, guys, feel free to throw them on the message board. Question here from Ty saying, why do you think the DXY and Euro have turned? The dailies just went to neutral and are failing. So markets don't go in a linear line, Ty. It just seems to be a correction in my mind at this point. I don't think there's anything necessarily to shift our broader attention, but let's take a look. First of all, if you know what we were talking about, Ty, yesterday, we were talking about the possibility. Who was it here in the webinar on Daily Effects? I think Marco, is it you? Someone was asking, why are you saying be cautious so early in the week? Because the dollar had made a run. Marco was you, says, yeah, because the dollar had made a run, right? And we were talking about the fact that the index was basically at near-term support. After a stretch like that, heading into the start of the week, it's just, you think about it from a trader mentality, right? Guys who have been long, guys who have been against the dollar, short dollar, long euro, and all this, they're looking to take some of these profits early in the week as the market stretches higher. You're getting unforeseen event risk. It just seemed like a time of where you need to be a little bit more cautious. Some of this comes with experience, guys. So, that's what I'm here for, and that's why I give you these cautionary tones. But what do the higher levels membership include? I can't figure it out. You're talking about for SB, Ty? So it gives you access to the IDO search function. That's the only difference. So Ty, it's an awesome system that does pattern recognition. I'll send you a couple links over in a minute, okay, to give you some more information about that. But let me get started here. So the DXY, 93.89 into 94.20. Okay, we talked about this 30 pip region at length. We've been highlighting it for some time. Okay, we talked about it on the Sunday update, that this is the area which is a huge pivot zone in price on the weekly charts. And that's exactly where we closed last week, right there, 93.96, right in between. So yeah, is it worth a little bit of a recovery? Would the market be vulnerable at these levels? Yes, and that's why I was a little bit more caution yesterday. So point being, look at this on a weekly close chart. If we're going to get a bounce, this is the area to get it. It was resistance on the way up, acceleration on the break, rebound before the breakdown, sure, right? So yeah, we're getting a little bit of a bounce in the dollar. No need to fret just yet, but keep this in mind. Major key resistance is still going to be on the weekly charts right with that long 200-week moving average, which has continued to govern the highs for the entire year. So broader picture remains unchanged. We made the turn that we were looking for. This is your first area of support. DXY in the daily looks to really focus just on the basic median line, right? There was the breach, acceleration. There was the test on a closed basis. Look at this. Doesn't get cleaner than that. So is it worth a bounce? Yeah, right? Could this be a 1, 2, 3 longest leg, 4 before the last 5? Sure. Nothing changes, right? We're just coming off of near-term support. So monthly open resistance is still 94.90, 94.63. Nothing changes on that. Intraday looks like this. Okay. My concern is that you could get a little bit higher on the advance. As I said, monthly open resistance 90 actually comes in ahead of that 94.70 target, guys. Like I said, it's let me just give you the exact figure, 94.63. Okay. So could we go a little bit higher, test monthly open resistance? Sure. Am I looking for failure ahead of that median line, ahead of that swing high from last week? Yes. So we're on guard here, right? We're on guard, looking for some sort of exhaustion playoff on a move higher in the DXY. Ultimately, I would like to see a break back below weekly open support to put us back on track. 93.69, again, downside targets unchanged. So sort of the recovery to the bounce, you know, again, the wave structure does look like this could be wave 4. Again, you'd look for that last low in the DXY. Tricky calling the highs. Tricky calling the highs. I've been looking at near-term price action this morning, looking for some divergence, looking for something. If this turns on me during the webinar, I'll get pretty upset, but here it is. We'll see how the U.S. Opens look. The thing with the, we'll go into the pound in a moment, but any questions here on DXY? Some sort of structural break, something to give us an entry. You know what I mean? Yeah, we might be making the turn now. We'll see. Watch this level here. Again, 94. What is it? 94.18. That's slope. Okay, real precarious area, real precarious. So we'll continue to track this one. And what are the implications for the euro? Right on the other side of that. Here's euro dollar from the previous update as well. I guess we might as well go in order. Here's what the euro looked like to start the week. Again, we were kind of noting that, well, you know, at this point, you look for a little bit more of an exhaustion. I didn't want to participate on the long side. On the pullback, 1669 is sort of where I want to see max, you know, support here on the euro. So here's what euro looks like. Well, I guess let's start off again on the weekly charts. Coming off of a big support, this is the turn that we were looking for. Again, we had 3 up weeks in a row, real stretched here. Could get a little bit more of a pullback, right? Doesn't change the scenario that we're still trading above key support, weekly support at 116. Okay, so taking this in stride right now from the weekly standpoint, daily standpoint, looks like this. Well, we can drop this at this point. Take this to the high from the high close from last month. Comes in at 117.98, basically 118. It's littered with resistance up here. Monthly open support would be a great spot against some 1675-ish would be a great spot for us to start to find some more support before we push higher. Again, remember, guys, these bottoms, right? They're not going to just be V format. So look for a little bit more capitulation, possibly lower here into the U.S. trade session. But ultimately, I want to see us start to hold support. I want to see euro start to move higher. Within the confines of the advance, it still looks pretty clean. Still looks pretty clean. So here's the intraday chart. Again, here's what we looked like earlier in the week on the open of Sunday. 1779, 786 retracement was the first level that we had noted as near-term resistance. We kind of came right into that to open up the week. Here's the failure, right? We were looking at this in the webinar yesterday on daily effects. There's the break, and the ultimate pullback looks pretty good. If we get a little lower, sort of same thing that we're looking at with the DXY, if we get a little bit higher, 1670s, 1672, nice area to start to look for support. Okay, last week's low there on the 5th. And also, the monthly open. I knew something was there. That's what this is. So this is also the monthly open for July trade. So just a big spot, right, to start to look for some support within the confines of the pitchfork that we've been following. Also looks like a nice spot to start to look. So we'll see if this thing can't find a little bit more of a deeper cut here into the U.S. Open to get long again. Again, if you miss the turn, guys, if we do miss it, if this ends up being low and we just press higher, if we push through the weekly open again, you'll have to wait for a little bit more of a pullback to try to get some sort of low to trade against. And that's the tricky part of trading these intra-week turns. So it's either a deeper pullback here for entries, or if it does break back above the weekly open, you'd look for some sort of pullback to try to get a stop against a low that you're comfortable with. But at this point, no triggers just yet. Here's the 30. There's a 3-point touch right there. Look for the blow off with the break above that. Remember the entries that we have on for the swing trades. We still have that entry. Don't change that. It's 116.95. I think Jamie put that on last night. So we want the deeper pullback, guys. We want the deeper pullback. Actually, we're triggered on that, aren't we, guys? Let me open that account. Yeah, we might have gotten triggered on that overnight pull. So let's see if we can hold 116.70s. That's the big level I want to do. See hold on the euro to get the rebound higher. Looks pretty good though. Any questions? Sort of the same picture, right? DXY on the upside, euro on the downside. That exhaustion trade is what we're looking for here. Now, when it comes to the pound, and I guess we'll go over just the Sunday update before we went over last night's levels. When it comes to the pound, guys, here's the deal. So you have some resignations from Parliament. Obviously, there's a lot of dissension amid the members on basically how the structure of the breakup and how Brexit is going to look. The failure in confidence is certainly, what do I want to say this year? Basically, what I want to tell you guys is just watch the headlines, but don't let it filter into your trading yet. Certainly, if things get very disorderly, guys, there's going to be the likelihood that we'll see a bigger drop off in the pound. Remember the fact that we're coming off of a big support. My line in the sand is still 31.64 on a weekly close basis. Excuse me, that's the 50% retracement of the advance from the 2016 lows, or 2016 lows. Basic trend line support from last year's lows. The lower parallel, right? Really nice tag there, really nice tag there, and here's the pop. I don't buy this notion that this is just a sell the sterling opportunity and forget it because of all this that's going on. Dagon saying protesting, Ty saying I believe just the opposite. I may, if May is deposed, sterling will soar. And Ty, that's another scenario, right? It's another scenario. I'm not here to impose a political opinion or try to call elections, or that's not my job, right? We're trading. Price action's what's making us money or making us lose money, and that's what we're focused on. So I'm not going to be, noise we do have to pay attention to, but all I want to tell you is from a trading standpoint, from pure price standpoint, nothing's changed. The threat of a near-term correction of a push lower back into 31.64 is there. The intraday chart does show that we've broken near-term uptrend support, okay? But the broader picture, don't freak out. This is not, everyone's starting to everyone's getting a little too bearish for my comfort. So all I want to say is 31.64 in a weekly close basis, watch it. Key support on pound. Pound on the daily chart looks like this. Just as we were talking about, these trades don't go in singular, linear moves. We got a bounce off support. That was the reversal that we were looking for on massive building divergence on the daily chart. We got the break higher. this was the first area of resistance. It's no surprise that we got the pullback. Now, is the pullback deeper than we wanted? Sure. Okay. But does that mean that the whole thing is it's Brexit night all over again? I don't think so. So look, 31, 33, the whole 33 level, I think Jamie noted in his report yesterday as well, something to keep in mind. It's just been a decent pivot in price. Looking to the left here back in 2017, calling some lows, calling some highs, breach, acceleration, support, all at 33, right? Same level. And you have slope. We showed you this a while ago. It's a basic parallel of the same dominant slope that we've been following from the yearly highs. No change, right? Same slope. So a good area to find some resistance, sure. Okay. Now, looking at a weekly close basis again, or a daily close basis again, not too surprising. Momentum is hitting towards 50. So if we're going to get a kickback, this would be the level. I'm looking for that kickback to fizzle out. Now, because of the headlines, I do want to tiptoe around this. Any intraday positions that I take, Ty, even if we do think that a deposed May would sort of accelerate the pound, even if we do take that type of move, we want to make sure we're treating it with a lot of respect. Maybe a quarter leverage, half leverage of your typical trade size. Just because the gyrations will tend to be big. Even if it rips higher, this is sterling, man. It will rip some faces on the downside, stop out all those weak hands, then rip. It's just what it does. So very cautious on this one, but the likelihood for this to get a little bit deeper. This does constitute an outside day reversal as far as range is concerned. The body didn't close below the previous day's open, so I don't want to treat it as such. It's just a resistance pullback. Okay, intraday, and this is obviously what we're trading off of, looks like this. It's getting a little messy, right? Here's what pound looked like to open the week. The pitchfork we were working with last week wasn't going to last forever, and it was so freaking clean, right? There's a June open. We gapped higher, as I noted into the report, just to get Friday's close to fill the gap, was having us look for a pullback towards 32.85, right? And then we want to stay constructive while above the lower parallel. We stretched higher into the 236 retracement, and then obviously this Brexit nonsense collapsed. And now we're sort of dilly-dallying with a break of this parallel. Here's what it looks like on the 240 now. I guess I should bring up the 120 exactly like it was. So what do you do with that? And this is the focus where when the lateral levels break down, guys, or when the slope breaks down, you want to just focus on the lateral levels. And actually, it's been insanely clean. 236 tag, pull back into 3203, rally into the June open again, 3290, and here's the pullback again. So the lateral levels are still right on point. It's just how do you trade it from here? So look, the big drop, the rally found resistance at or ahead of the weekly open. Here's the pullback again. I do think you risk one last low. So it kind of would jive well with what we're looking at with the euro. So this is just sort of 1, 2, 3, 4, 5. This would be the A, B, or this would be the A, B wave, and you're looking for a C to complete just a near-term correction. So the risk for a drop into 31.64, my line in the sand, what we talked about on the weekly chart, also manifests itself here on the near-term chart. Also, 31.69 ends up being the exact 618 of just a near-term rally. Okay, so the July range essentially. One level I was looking at earlier today, and I just want to highlight it. It's not my base case scenario. I hope it doesn't get quite this deep, but the 100% extension of the move, okay, brings you into 31.27. That's like max. You're shooting darts at that point. If it breaks 31.64 and starts to accelerate lower, this is sort of the last ditch effort. If this is sort of two equal leg correction where you'd expect intraday spike to kind of taper off. So, I'll leave it there, sort of a really light level just to keep in mind. But more, for me, more of the focus is on a 31.60, 31.69 sort of hold for support on another drop here. Oops. Any questions on sterling? Um, I don't trade news either. I was just, it was just a comment. Oh yeah, Ty, I'm not trying to single you out. Um, yeah, no, it could be a scenario that pans out. I completely agree with you. And it's not necessarily trading the news or not. We definitely want to keep an eye on this stuff. But it's just today I was going through, as I do in the morning, you kind of just scan the headlines, you see what the market attention is looking at. Um, and like, it's just insane. It's just insane. People start to, scream wolf every time there's some sort of hiccup in that process. And yeah, there is a huge variable of the unknown, but I think it's a little overdone here. Mike, with the hugging of the trend line, is price more likely to continue in the direction, i.e., short, more time spent at the trend line? Digon, you talking about the sterling chart right here? Digon? He says, yeah. Um, I'm trying to get your question here. Are you talking about this parallel? So if the parallels, I mean, for me, I look at near-term price. So when I see a break like this, I think I know what you're talking about, but let me just see if this makes sense. When I see a break like this, I go deep in price, and I want to see, is the gradient still giving intraday price play? And I think it still is. Support, break, saw acceleration. The breach, saw acceleration. It was support, 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 support. Look how tight this gets. Get it even deeper. What is that 30-minute? I'm gonna give you a 10-minute chart. Okay, look at this. Support, 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 break, resistance. It's just ridiculous. Resistance, break, here's the acceleration. So I'll tend to leave it on there. You don't want to get too granular with it, Dagon, but it gives you a little bit more. Let me say this: when I see something straddling a parallel like that, right off the bat, I'll typically look for some sort of consolidation break because it's so indicative and it happens so often. I can't tell you how many times these things. Um, but now we're looking near term in price, right? I can't publish this stuff because this is going to be obsolete in the next 40 minutes. But just to give you a picture, right? So the market is basically essentially consolidating around slope. So you look for the consolidation break to give you sort of a little bit of a notional move for the near term. Also keeping in mind that at this point, now we're moving into Tuesday, we have a pretty decent initial weekly opening range. Here's your weekly open. We filled the gap right into the weekly open. Here's the pull higher. Here's the pull lower. Now we're back at square one, right? So you have a pretty decent weekly opening range between 33.60 and again, I'm not going to shave off 31.60. It still has the possibility of dropping there. So the immediate focus right now is on this slope. If it breaks the downside of this sort of near-term consolidation, Dagon, that would give me a little bit more of a conviction break of that lower parallel. Long story short, um, I'm still looking for a settle lower to get back on the long side. I don't think we've changed. And if we break this consolidation higher, this is the trade, guys, just to be completely clear. You don't target anything outside the weekly opening range until we've gotten that break. Okay? So 32.90 still is the resistance. If that breaches near term, if you're in the long side or if you get a decent entry, 33.60 is where you'd want to bail on the majority of the position. Stops at break even or better. At that point, you want to trail your stop. That's fine. However you want to play it, but we can't target outside the weekly opening range until we finally get the breach, especially when there's a headline risk where who knows what the hell's going to happen today. Ty says worldwide the headlines are fraught and center lots of action in the week. Yes, lots of action in the next week. Well, we get the return of a little bit more of data prints from the U.S. next week too, right, Ty? Dagon says, nice. I love this stuff. Cheers, Dagon. Do you have a webinar talking about weekly bars and opens? Ty, we do in the resource section. I do talk about opening ranges here. It's a little bit more of an overview. I know that you see me on Daily FX all the time. We talk there. The Foundations of Technical Analysis series is actually a lot of my research is all mapped out there. So let me just send this link over as a resource to you guys. There is a webinar I'll be doing on Friday, by the way, on this as well. But here's the link. That's I don't know if I have a weekly. Let me ask you this. Why am I even looking through this? What's your question, Ty? Cheers. I appreciate that, Dagon. He's sending through the link. I just sent it to him. Thank you. Is there a specific question that you have on the weekly charts? Do let me know. Pooja says, nice tidbit on the Sterling headline. Thanks. Hey, you're more than welcome, Pooja. Great to see you as well. So that's my take on the Sterling, and I'm sticking to it. Okay. Looking for either a break of this near-term consolidation and give us the okay to continue back in the favor on the long side. More than not, my base case scenario is still for one more drop here to get back long. Okay, going once, going twice. That is Sterling. You always talk about opening ranges and weekly opens, then you key off them. Yeah, so Dagon, Ty rather, the weekly, there's a lot of material on opening ranges through that stuff. So definitely go through that. It's very, very basic concept, rudimentary stuff that, you know, we did research on like years ago in 2008 or 9. We started to look, that's when I became a little bit more operative with that kind of an analysis, where you look for the markets to essentially set a high, low, and then test one of those high lows or vice versa. You're basically looking for an essential initial weekly opening range. You can do it on a daily basis. You could do it on an hourly basis, Ty, the hourly opening range. You look for the market to set a high, low, high and test it. And once you breach, the market will tend to close that session on the extremes. And this is just, you know, statistics. Typically in an uptrend, markets will be at the lows early in the session, at the highs late in the session, and vice versa. So if I'm in a trade and the hourly opening range breaks to the upside and I'm long, I'll typically wait towards the close of the hour to try to exit that. Okay, because odds are, statistically speaking, that we're going to extend into those highs towards the end of that session, whatever you're looking at, whether it's the hourly opening range, weekly opening range, or even monthly opening range. So for me, all this has done on its face value, here's the weekly open. You set a high, you set a low, you're right back into the weekly open. So you look for a break of this immediate range. When we break this immediate range, Ty, odds are we'll extend towards the extreme on the latter part of the week. So if we breach to the upside, I look for a Thursday, Friday high somewhere up here. If we breach to the downside, you look for a Thursday, Friday low at the lower targets. Real basic stuff. And I'll walk you through a couple more examples there, but yeah, you're more than welcome, sir. You're in the right place. All right, so that's pound. Let's move on. I guess we'll finish up this report, dollar CAD, and then we'll go into yesterday's update. Here's what dollar CAD looks like. So, not here. Where is it? Where art thou, dollar CAD? Here we go. So here's what it looked like to start the open. And as I said, price broke support on Friday, but it wasn't very convincing. And the reason I say that is both from the momentum standpoint and from basic price, right? We always talk about the fact when the markets break a major key support or resistance, you want to see acceleration. I don't want to see a mosey on down, right? So here's the break on Friday. We did close the day below it. We closed the week below this key support range we've been watching for over a month. So objectively, you know, that would put you on the bearish side, but the way you did it, right, wasn't very convincing. So I started off the week neutral on this one. I said, look, if we get a rally to 31.30 and that holds, well, that would be your entry, bottom line, and you'd look for a move lower. We didn't hold. It just pushed right through. So here's dollar CAD now. Nope, that's Aussie CAD. Dollar CAD. What do you do with this? Nothing. You sit on the sidelines and you let this thing do what it's going to do. If we get a decent rally, a little bit move higher to fulfill some sort of retracement, some sort of extension off the low, then we start to look for re-entries. But I don't think we're there just yet. So what is this? This is the high from June of last year. Okay, I'll just leave this on the reference. But essentially the levels are unchanged, okay? The whole focus was that we needed to see a hold here. We didn't. We broke. Yeah, we just made an outside 2-hour reversal right off the highs. So near term, if we break back below 31, we're back on course. All things held constant, let this thing drift higher. Just like the DXY has a little bit more room, just like the Euro might have a little more room. I do think you need to respect the upside here near term before you start turn on it again. Any questions on dollar CAD? Ty says euro yen, please. Yeah, I'll add euro yen to the list here for you. So again, on the sidelines for dollar CAD, remember the broader picture, just to give you again the bigger sort of 10,000 feet view. Here is dollar CAD, and again, the whole point of why we were concerned about this region was how critical of a support zone this was. My favorite Fibonacci confluences, you hear me say it all the time, 618 off the high, 100 off the low, or vice versa, right? Here's a 100% extension, 618 retracement, that same range. Caught the highs, the break saw acceleration. We closed just below. Not very convincing. So sure, is it worth a little bit of a rebound? Why not? Yeah. Am I going to play the long? No. Even on an intraday basis, we've been waiting for this turn for a while. We had a really nice outside weekly reversal off that 50. I'd rather look for a rally to sell in dollar CAD than try to press the long. Also note the daily momentum support trigger that we were looking for, which looked like it was about to break yesterday. Here it is. Got to see a daily close below that slope for it to be some sort of operable trigger, at least to suggest that the downside is in play. So here's dollar CAD on the daily charts again. Here's your monthly open. Monthly open comes in at 31.51. Okay. So if we hold here and we break back below 130, sure, right back on trade for a move on 30.46, 30.50. All things held constant. Again, I think you have a little more room before this thing peters out. Questions on the loonie? That's number 4. Okay, let's hit yesterday's update. Here's what I'm working on. Aussie. So we were looking for an Aussie exhaustion pullback, and it looked apparent both on Aussie dollar and Aussie yen, which we haven't talked about in a while. But let's hit Aussie real quick first. So here's the update that we've been following on Aussie. The previous guys, remember the daily chart is always no more than one click away. So if you want to follow this setup from the previous, just click on the update, and it'll always have the daily chart if it's not provided there. So the longer term picture, weekly support, 73.27. We talked about it. I don't want to get you guys bored with that. The low day close comes in at 73.36, 73.27. That's still your key support. Here's an example, Ty, of a monthly opening range. So it's the 9th, right, of the month. We've set a high at a former swing low. That is also the monthly open, so 74.11, 74.12. Key support, well, we just talked about weekly support down here at 73.27, huge region, 618 retracement, a multi-year advance. So here's your monthly opening range. If it breaks to the upside, we look for a stretch for a late month high. Okay, it's not going to be a straight line. It just means that towards the latter part of the month, July 20th, July 25th, we should be looking for the extension of the push towards that region. If we break to the downside, you'd look for a late month low, targeting one of these levels. So we did breach to the upside, okay? And I do still think Aussie does have legs. It's just an interruption here, maybe the play before we start to move on. So here's what Aussie looked like yesterday. 74.50, 74.75, both topside targets. The last target was 74.94, 74.50, okay, 74.30. Both of these levels on the upside. 74.94 would be the last extension target to the up if we do get it. It's failing just ahead of that. And what I wanted to know yesterday is it's constructive above 73.97. That's kind of what I'm still looking for on Aussie. So here's the bigger play. Okay, and here's the chart from yesterday. So we got the pullback. We tried to test it again in an overnight trade. It failed. Came into the median line support 74.31. That's exactly where we just bottomed out, rebounding back into resistance here. So very similar scenario where I do think the risk is for one drive lower. And I'd be looking for entries if we can. At this point in slope, you'd look to even choke that up a little bit more, bullish invalidation just along that parallel. But that's sort of the game plan for me. It's if we get the drop lower, we get the entry. Or if we breach 475, it'd be hard to chase it at that point, but you'd need to find some sort of corrective pullback on a breach of resistance pullback there to buy again. This is too, well, it's not actually too far gone yet. About 25 pips off the low. Let's see what it looks like. So lesson number 2, Ty, coming right up. Mini trends, he says. Yeah, check this out. It just occurred to me right now. Now Aussie has also made a pretty decent initial weekly opening range high. Here's what the weekly open looks like. This is the reason why you'll find all my intraday charts have a line denoting the weekly opens and the monthly opens. So here's the weekly open. You rally into a high. You retest that high. That's a conviction weekly opening range high. You rally towards the weekly lows, and it holds. So now you have a well-defined weekly opening range for Aussie. If it breaks to the upside, you look for a Thursday, Friday high. If it breaks to the downside, look for a Thursday, Friday low. Now, Ty, it's important that this is not a strategy in and of itself. It is simply a tool to help give us a little bit more conviction on what we're seeing in price. So if I'm bullish, well, a weekly opening range break to the upside, that would be helpful, right? It's not a reason to take a trade, Ty, but certainly these are things that can help us add conviction on the trade. So I hope that offers some help there. Yeah, so it's either a deeper pullback here, guys, or the breach of the highs. It's the same thing. It's the same thing. The Aussie, well, let me zoom that back out now to get you the comparison here. It's just a comparison from where we were early in the week, right? Still no change. Levels remain unchanged. I want to see it hold 74.11. I know Jamie has his stop. I think 73.73 on the swing trades. So a drop into this region would sort of be a really nice hold, I think, for the larger swing higher. Any questions on Aussie? So by the pullback, looking for new highs. Yeah, Ty, I do think you look for new highs. Absolutely. I mean, just based on where we are in trend. Here's the monthly opening range break to the upside. So inherently, we just talked about that. Objectively, I'd be looking for a late month high. The weekly opening range break can happen to the downside here. That gives us the pullback, doesn't change anything. Might go right back into the monthly open. And again, we look to rebound from there. But this is all just really objective stuff on price analysis. And the whole reason we're trying to fight the downtrend, a lot of people are thinking, well, Mike, why the hell are we even trying to buy them? Just look at the lines that you're drawing here. We're obviously in a descending channel. Absolutely. But the weekly chart highlights a pretty big support level. And this is why we have to always keep our minds on the bigger picture. Because if I was looking at that 30-minute chart, Ty, or if I was focused on that daily chart, I'd be completely oblivious to the fact that this is a pretty major level. Right? So fitting the pieces of the puzzle together. Hope that helps there. Dagon says, if the trigger break happened yesterday, would you have taken a short? Digon, was that for dollar CAD? Is that what you're saying? Um, we did, Digon. If you remember, we were short dollar CAD. Yeah, we were short dollar CAD early on after this reversal off the highs, right? If you remember, go back to the scalp reports, the previous ones here. Where's the last dollar CAD scan chart? Well, you could go back. Here we go, 7.2. Even earlier, 627. That's going to be the daily chart, though. But we were following the decline. Remember, the major two levels of support that we were talking about were 31.65 and 31.30. That's where we ended the position. We weren't interested in playing it. That decline there was that break, right? 629 was a 7.2. We already seen that break. So that's already effectively played out, right? That's how this is a break you look for when you're already in the position. You're kind of looking for that to the conviction to keep you on the short side of the trade. But from a daily standpoint, yeah, that's played out already. This slope serves as possible resistance on the way up, but yeah, we got out as we got into 31.30. Once we hit the bottom of this, that's what, well, personally, that's where I'm out. So the whole point was looking for re-entry. The move lower into support sat there for a while, and again, after sitting there for a week and a half, we broke lower just into the close of last week, but not much conviction on the drive. So do think you get a little bit more of a conviction bounce there, or a near-term bounce there. So any questions? Sorry for that side step back, but I just wanted to get to Gon's question there. Any questions on Aussie from here? I'd like to see a drive lower um, to try to get a better position on the long side. Aussie yen was also very clean last night, and this one came off of very, very clean resistance. The level that we had talked about, 83.04 last night, okay, it was right here. This is just a basic 618 retracement of the range, but it was also the exact 50 line. So an advance into here was sort of the big resistance that we were worried about as we were talking about the threat was for a pullback lower here, but the broader focus is higher while above this parallel. Ideal scenario, you get the drive again towards, this 50 line. If we lived in a perfect world, 82 to see this bounce right here higher. But the initial turn is happening. Okay, the drive lower is not really there. But remember, on this trade, we're looking for the pullbacks to get back on the long side. Ultimately, Aussie yen has come off a longer term support. Here's Aussie yen on the weekly charts, right? This is the big sort of juncture we were looking at. We got a weekly close below there early in the year. It was quickly refuted. Since that, we have been unable to close below. And since we like the Aussie on the long side, I thought this was a decent one if we do get a pullback to get long. Now it has the abomination in it, and dollar yen is breaking higher, which does kind of help us a little bit. That's yen weakness, right? Aussie strength. So, ultimately we need to break this near-term range, but major resistance doesn't even come until 84.25. So this thing looks pretty clean as far as the key range that we're trading within. That's the weekly chart. Daily chart looks like this. Okay. Very, very similar scenario, Ty. Use your initial monthly opening range. I say initial because typically you want to see a monthly opening range like the 15th, 10th, a decent range before it breaks. This is kind of early in the month, so I'd be a little skittish, but it is, an objective break higher. There's the 618 retracement, 83.04. Could we get a little bit more of a steer lower? Yeah. Do I want to buy that? Ultimately, I would be still favoring buying pullbacks in Aussie yen. Here's what it looks like on the intraday. So the 50 bounce here, sure. Yeah, I think it's got a little bit more of a drive to go. But if we break 83, we got 83.33, the upper parallel. I do think this thing could go really fast if it starts to break that upper parallel. But objectively, we're looking for a pullback to buy still. Just want to see if anything comes up here. Yeah, so even to get a basic 236, you still need to drive towards like 8250. Could you play this on the short side, real near term on a nimble play? I suppose you could. Yeah, but I would need to see a little bit of a change in the momentum profile. So remember, in strong uptrends, support at 40, that's exactly what you're seeing here, is a 30-minute chart, right? Every pullback, momentum support at 40, every pullback, momentum support at 40. So if this is going to get a larger turn in momentum, if we rally here into 60 and fail, and then we see a break of the 50 line, that would give us the shift of a change in behavior at least for a drive lower here in Aussie yen. But it's in an uptrend. I don't think anyone's going to argue with me on that one. Questions, comments, concerns on Aussie yen? All right, that is number 6. I guess we should hit the yen crosses. So before I hit euro yen, let me just take a look, Ty, real quick at dollar yen. So here's what dollar yen looks like. The thing did break resistance just now, and I brought this up on the last daily update. Where was it? Dollar yen right here. So remember the daily chart really highlighted 110.69 into 110.88. That's exactly what capped last month's high. Okay. We also had basic slope resistance in there. If that breaches, remember that the weekly charts for dollar yen highlight this huge region between 110.88 and 111.62. Here's dollar yen's weekly chart. It's a big region of resistance, but so is the pivot that we've seen there. Support, break, acceleration, support, break, acceleration, resistance, and now you have the pitchfork or basic, forget the pitchfork, basic trendline resistance right there as well. So listen, very similar to what we're looking at on the euro, very similar to what we're looking at all these dollar crosses, a little bit more upside to go, but this is where you're holding your feet to the fire and you really want to kind of watch out. So if it stretches into 1166, I'd be looking for exhaustion. That's my line in the sand. Who said something about sand earlier? Someone was asking a question about that. How often do you get trades at the line in the sand? Says Ty, that was you, right? Quite often, because that's what invalidates your opinion, essentially, Ty. So whenever we get stopped out on a trade or whenever the market goes through my line in the sand, that has to fundamentally shift my opinion. Otherwise, I'm just being stubborn, right? So 1165 has been that line in the sand. We approached it earlier in the year, back here in May. We got pretty damn close. The high was 111.40. Okay, turned out to be a great reversal. Here we are yet again. Here we are yet again, right? So slope is there, a 50 line. It's not a Fibonacci level per se, but it's half the range of the entire decline from 2017's. Just a big level, right? So on the daily chart, I'll show you the daily chart first, I guess. Here's what it looks like: 1166, 1162, whatever you want to call it. There's the slope. I mean, you can't make this stuff up. This should be like dark red. All right, so I don't want to try to fade dollar yen. I don't want to try to fade dollar yen. Do you get in the trade in the line in the sand with a very tight stop? So Ty, my line in the sand is the bearish invalidation level or the bullish invalidation. It's what changes my opinion. Sometimes there'll be an opportunity where you can there's a setup there, Sometimes it might not, right? So if it crosses my line in the sand and it closes above 1162, that makes me bullish. I want to buy pullbacks. Is there going to be a trade when it gets right there as it's breaking through? I don't know. It all depends on what the near-term price action is saying. And that's the difference between swing trades. We're a little bit more planned out, right? Where intraday, when we're looking at these breaks, we're looking to take advantage of the near-term movement in price. We have to see what price is doing when we get there. He says, I understand. Right on. But good question. Good question. So 1162, I'll see. That might be a great entry if we get it on a spike type of play. But that's a big level for me on dollar yen. So now that we kind of have that picture in mind, and again, here is the intraday picture. The only thing I wanted to highlight here is this looks like an exact 100 off the low here. Looked like a complete wave count to me. So if we take that first leg, you can see that 1135 is the exact high. The high we just made was 1135.4, literally. So it's the abomination. You know what I mean? It's going to probably push higher. If we get the 1162 tag again, I'll be watching that with great interest. But any higher, yearly opens all the way up at 112.65. Do not want to get caught trying to sit there. Yes, who said that? Digon, momentum going above 60 on dollar yen daily. Even on the intraday, 240, you're still well in overbought condition, right? Not something we want to fight. That's not the trigger. Good observations here, guys. All right, so that is dollar yen on the 240-minute chart. Any questions on this? So let me take your question here on euro yen. I'm not sure if we looked at this yesterday, but well, we may have. Yeah, who's comment? Dagon on the daily. He says on the momentum is going over 60 on dollar yen daily chart. That is true. You want to see the daily close though, because remember intraday plots on momentum really don't mean much until that candle closes. So, even if this stretches all the way into 1163 and fails, it might look like it never even scratched it. So just keep that in mind, okay? But for euro yen, okay, this retracement now null and void. We've broken through the highs, so that's done. This retracement now null and void because we've broken through the highs, so that's done. That's interesting. Okay. Okay. So here's your objective monthly opening range low, right, Ty? This is just objective stuff. And that happens to converge on slope, just basic trendline support off the low, 128.40. So that's the line in sand, or your bullish inval for the immediate advance right here. I think wow, that's an exact 100% extension off the low. That's crazy. And slope. Damn, that was awesome. All right, so this reversal. Okay, so here's the deal on this one. Near term, the immediate threat, and again, Ty, this is just looking at this shotgun approach from the daily chart. I worked out right in front of you. Uh, Immediately, I think the threat would be for a pullback off this level. You have the 200-day moving average. Um, that comes in line basically with the 618 extension off the low at 130.19 into 130.30. Okay, so give it a 10 pip range there of support, 20 pip range of support, resistance rather. We would need to close above this on a daily basis to keep the immediate upside in play. Big levels start to come out up here. This is just your low from last November, but it's also the 50% retracement of this year's range. And that converges on former slope support, the break, which turned us increasingly bearish early May, resistance, confluence resistance now. But again, we would need a daily close above this level to keep the focus towards 131. If you pull back from here, I would look for soft support right around the monthly open. Kind of assess things there, see how the market reacts, and go from there. But wouldn't chase this any higher from here. Also, note one thing. From a monthly opening range standpoint, Ty, this doesn't have an opening range high, right? This is the monthly opening range low. We tested it a couple of times, but then we never really made a high and tested it. So this could be the monthly opening range high. I don't know. It's still early, too early to tell in this advance. But I wouldn't be chasing it from here. Let's see what the near-term chart looks like, shall we? Oh, it looks like I had that retracement here yesterday. Nice. Okay. So there's 131 again. Decent support triggers in play. This is your monthly opening range low, right? Here's your July open. Boom. And the only thing that's not on here, that retracement's null and void now, is the extension that we added on the daily chart. So could this kind of like drive from here into 131 before failing? It could. But my problem is, guys, how are you going to trade that from here? You could take a stop against that low, but there's no triggers on the upside here. And in fact, there's a pending support trigger. So if anything, you're at risk for the setback more than anything. But ultimately, above 128.50, I do think you look to buy it. I can't advocate buying it from these levels. Do you know what I mean? Ty, does that make sense? He says, yes, Yuri N 240. If price broke the 786% line and RSI trigger broke support, would you consider a short? With the stop against 3065, I mean, the ATR here is bigger, so you can't work with like a 20 pip trade on this, guys. The daily ATRs are typically wider on euro yen. So yeah, if you're comfortable with a 30 pip stop or so against the high to try to get down. The reason I like 79.29, by the way, this retracement is null and void, right? Because this break of the highs, but I do want to highlight that basic weekly open support is right there anyway. That's your weekly open, 129.58. So you'd be risking 30 pips for 50, if you get the break. Not bad. We are forming a reversal on the daily chart. Ty, that's a very risky thing to say, man. We're way too early in the day. I used to be just like I used to say that stuff all the time. We can't even start to make assumptions on daily reversals, guys, until we get at 2, 3 o'clock maybe in the afternoon. But markets haven't even opened the day, Ty. How am I going to make an assumption that there's a daily reversal on hand? This can look like a daily reversal. Could look like a hammer. It could look like a bullish engulfing. All of this over the next 5 hours could still form, right? So we have to always mind the closes. That's another reason why I always talk about the closes, ties, because when we're trying to make assessments on candlestick formations, a lot of people will take the intraday daily candle. Now, how does that make any sense, right? The intraday daily candle can look like 7 different formations until that candle closes. That means nothing. So yeah, it could look like a daily reversal, and specifically, Ty, if we close below 30.19, again, that would be an epic failure, right? It's going to look like this, probe through and pull right back. So today's close matters for me. I do think intraday you probably could get that tag of 131. I don't know. I just don't think it's got the juice right now. How important is picking the data feed correctly? Ty, I wouldn't put too much emphasis on it. Ideally you're charting on the feed that you're trading off of, but realistically speaking, some brokers just don't have all that good of a charting system. So if you're not using the same exact feed, I wouldn't. It's not the end of the world. I would just make sure you're keeping your targets on the inside. So if I have a retracement at 130.19 and I'm trading on a different feed, my limit might be like 130.16, right? Give yourself that little bit of a cushion just in case that broker doesn't quite extend to that high. But it's not the end of the world. No, it's not a big deal. Okay. All right. Any more questions? I'm over on time, so I got to wrap it up there, guys. We will be back tomorrow morning for another intraday strategy webinar. Also, don't forget tomorrow on tap is going to be the midweek strategy webinar. Thanks for your attention this morning. Good luck trading, and I will see you tomorrow. Keep your eyes on this. By the way, someone was asking earlier about the SCOTUS confirmation, the Supreme Court nominee. I don't think that's going to be something that you'll want to even filter into your trading. Shouldn't be a market mover by any means. That's complete political type of argument. Out of the pending trades, we have only euro dollar triggered, right? I do think so. Sterling, I think we have the entry lower. Let me open that real quick. I think we have them issued below 33 on Sterling. Yeah, Sterling's 32.95 and Aussie's 74.26. Okay. Good luck trading, guys. See you tomorrow. Cheers.